If you're going to make it as a realtor, closing one deal a year isn't going to fly anymore. If you're a loan officer, closing one deal every other month, it's not going to fly anymore, right? No one's going to do business with you because you're not adopting technology at a pace where you're valuable. You're just not.
Hello, everyone. Rick Albert here with another episode of The Key to the City of Angels. I have the financing geek and mortgage industry executive here, Eric Mitchell. Eric, thank you so much for coming on.
Thanks for having me.
So why don't we start with, what are you working on and how did you get into this space?
What I'm working on, I think, is the same thing everybody's working on, which is adopting AI, rolling it out, adopting technology. I used to say technology doubles every year. And then it doubles every 6 months, and then it doubles every 3 months, then it doubles every month, every week. Now it's like every day I get an email saying, hey, guess what AI can do? It's like, oh my God.
It's wild.
Like, how do you keep up with this? This is crazy. And so we've already rolled out AI to the consumer, meaning, so when a consumer takes a loan application or puts in their loan application, they put in their name, their email, their phone number, they create an account. But name, email, phone number is enough information for our system to do a soft credit pull. And so the system automatically does a soft credit pull. Then the client's filling out the rest of their information. It's automatically populating with the AI. AI is running the automated findings, right? So the DU or the LPA approval. Then the AI agent comes into the consumer while they're still filling out their loan application. Hey, congratulations, your loan is approved. Here's the conditions, right? You can upload them here, or I could just go get them for you. Just click this button and authorize me, and I'll just get it, because we've got a direct feed into the IRS, the banks, like it's all through Plaid, right? So we'll just pull it all in, payroll, reads all the documents. You're good to go. Do you want to close next Thursday or Friday? We're done. And this is all within like 4 minutes.
So instead of the traditional 21 to 30 day escrow, you're talking like 2 weeks.
9 days.
9 days. Yeah.
And that's just because of the signature waiting periods, right? We have to get the CD,
fair.
we got to wait 3 days, right? It's just because of the signature waiting periods. That's the only reason it takes 8 days. Otherwise, like, we're doing HELOCs same day. Like if you apply in the morning, you're closing that afternoon.
Interesting. I mean, to be fair, like if you're a W-2 employee, it's pretty straightforward.
It's very straightforward.
You know what
It's always been straightforward. Our industry made it complicated because it was profitable to make it complicated, but it's not. There's only so many fields.
True. And I guess now, by simplifying it, sounds a little morbid, but like now you don't need as many underwriters. Now it is profitable to have.
So as an underwriter, we used to say, look, can you underwrite 2 new files a day, brand new from scratch, and can you clear 5? So 5 existing files, clear the conditions, 2 new ones, and that's a good underwriter. That's a good day. Now in underwriters, underwriting probably, I think we're at about 12 loans a day. Same amount of time, same amount of energy, but they went from 2 to 12, right? Eventually it'll be 20 and then 30 and then 40, right? You still need underwriters, but you don't need as many.
Right.
Right? Need less. Same with processors, docs, funding, post-closing compliance, all of it. It's becoming much more efficient now with AI, for sure.
Do you see any potential issues going forward because of it?
Sure. Oh yeah, there's no shortage of issues. There's no shortage of problems that can arise. It's kind of like if you look at a census, right, and you count people manually versus analytics and predictives, you're going to get a more accurate count using analytics and predictives than you will do knocking on doors, because a lot of people don't answer the door, or they don't tell you the truth, or whatever, right?
Right.
But you got problems with predictives and analytics, right? Like there's other problems that you have. Yeah. So the same thing with machine learning, right? You're going to have things that'll go through that shouldn't have, and things that should go through that don't. So there's still going to be humans that are going to have stop gaps, right? If a loan's not approved, it doesn't mean you're not approved. It just means the machine couldn't do it. And so we'll jump in and help and figure out, maybe you need a bank statement loan, or maybe you need a cross collateralization. Like there's still complexities,
right, that
a machine's not going to understand yet.
Yeah. And I've also, when I talked to a lot of people about AI when it comes to real estate, is, AI is just doing they're doing a really good job of guessing. But that's what AI really is. Okay. But
sometimes
what they're not factoring in is like the most common ones, like, oh, I use ChatGPT to determine my home value. And it's like, okay, but there's conversations that are happening offline that there is no data that's there. Right. So it's almost like almost everything that AI is quote unquote replacing, at some point, it's going to touch a human hand.
Yeah, there are certain things that AI can take good guesses at, like home valuations, which really is a guess. That's really what a realtor is doing. If a realtor is right, they're taking their best guess as well. Look, based on comparables, based on, I think we should list at this, right? But you might have hit the mark. You might be a little high. You might be a little low. You don't know until the market tells you.
Right.
With underwriting and mortgages, though, right, your FICO score is your FICO score.
It is what it is.
That's right. Your income is your income. Your net worth is your net worth. Like, these are just fields.
Yeah.
And so it's not guessing. It's just, so the borrower said they make $9,000 a month. Does their pay stub match that?
Yeah.
Yes or no? Right. And so then it's just scanning the pay stub, right? Pulling in all the numbers, filtering it, then comparing it to what the borrower said, fixing like the borrower might say $9,000 a month, but it was $8,997.27 a month. Great. So it fixes the field to have the exact number. And so AI is very good at being very quick about analyzing and reading documents and then fixing fields, which is what we're using that on the processing, underwriting, docs, funding, post-closing side of things, right? It's more like, think of it like manufacturing. It's pretty precise, but it kicks out false positives and false negatives sometimes. And so there still needs to be humans stepping in saying, because for us, it's about the client experience, right? If the client has a bad experience, then we're all in trouble.
Yeah.
And so if the loan is denied or going to be denied, the AI will say, hey, we're going to have a loan officer call you. Thank you for your patience. It doesn't say your loan's denied. It just says, hey, we're going to have a loan officer call you. Yeah. So it's just a matter of make sure you have the right things in place to protect the customer experience.
Yeah. Which brings up another interesting point. So, because I'm not a loan officer, but I kind of feel like loan officers are similar to, let's say, real estate agents, where really our job is like client acquisition, right? So loan officers, a lot of it is really just selling the loans. So have you been seeing any sort of trend in how loan officers are working? Are you seeing some loan officers kind of falling behind because they can't, you know what I mean? It's like,
for sure.
I would imagine loan officers are similar to realtors where there isn't enough business to go around.
Well, when you look at real estate agents, right, I think it's like 83% of realtors earn an annual income below the poverty line.
Yeah, probably.
And so, yeah, there's not. But there's a lot of realtors just in it part-time and they close one deal a year. Great, right? And that's fine. Loan officers, there's similar, but it's not quite as bad. But we went from 300,000 licensed loan officers going into 2022, and I think we're down to 75,000 licensed loan officers now. So
interesting.
300,000 to 75,000. And so we lost a lot of loan officers, but that's good, right? Yeah. It's thinning the herd, right? Get rid of the weak, which benefits the consumer, right? That just means you've got 75,000 stronger loan officers, which is better for the consumer. So the way I think of being a loan officer or real estate agent, you've got all the marketing you have to do before a transaction. There's all the marketing you have to do during a transaction. And then there's all the marketing you have to do after a transaction, right? Client follow-up, trying to get referrals, create raving fans, et cetera, right? And so how many realtors do you know? How many loan officers do you know have effective marketing in all three of those stages?
Right.
1%?
If
maybe?
That.
Right.
Yeah.
And so it's not that technology is going to replace realtors or loan officers or salespeople. It's that the salespeople who adopt the technology will replace those that don't. Because there's no way for you to be valuable to the consumer if you're not using technology properly.
Yeah. No, that's fair. I mean, I've had one of my biggest pet peeves is when random loan officers call me, because like for loan officers, one of their biggest sources is realtors. Yep. And I get it. But then they call and like, oh, I'd like to earn the referrals. I'm like, well, I'd like to earn your referrals, dude. So let's have a go. They always get taken back by that. I'm like, but you're asking me for referrals. Let's work together. But I'm like, okay, well, what are you doing differently? And sometimes, and like a lot of times they're like, well, we kind of have, basically the same programs
We
as
have
like
great
everybody
service.
else.
We have great products.
Right? I'm like, I wouldn't expect anything less.
Yeah, great rates.
Right? I'm like you and everybody else. Or they're great rates, but you got to buy the loan down. The rent,
Yeah, I mean, one of
right?
the things I try and teach loan officers is there's three things you don't talk about, and that's price,
Mhm.
product, and service. Those are the
Right?
three things you don't talk about. And the reason you
Mhm.
don't talk about them is because your competitors are only talking about them. And so as soon as you start talking about them, you're in the herd. You just got thrown into the herd,
Right.
right? You're just part of the sheep. Like
Yeah.
you have nothing if you're talking about any of those three things, you have nothing valuable. It's like when you meet somebody and they say, "Hey, how's the weather?" Really? How's the weather?
Look
Like
outside.
that's all you got? How's the weather? Like I check out of a conversation if somebody asks me about the weather. Oh, San Diego, how's the weather? Really? It's San Diego. It's heaven.
What do you expect?
What do you like? How do you want me to answer that question? I don't even understand. Like, is your skill for conversation that bad that you're going to ask me about the weather? And the same with salespeople, right? If you're going in talking about things that your competitors are talking about, then you aren't trained properly to create
Mhm.
value, right? It's far better, just like you said. Hey, Rick, it's Eric Mitchell with Nexa Lending. Hey, I've got a referral from an immigration attorney for a client that's pre-approved to buy a house for about $900,000. Do you have time to take on a new client right now? Do I have your attention now?
Absolutely.
There
And
it
you
is,
already
right?
knew it pre-approved.
And so, okay, so now how do I get a pre-approval from an immigration attorney? Oh, here's how you go get a pre-approval from an immigration attorney.
Right.
Go get that first, right? Here's the script. Here's what you say. Here's what you do. Or go to a divorce attorney, go to a bankruptcy attorney, go to a financial planner, go to a CPA, go to a builder, go to a real estate investor club meeting, whatever.
Yeah.
Right? There's tons of ways to get a pre-approval and then approach a top producing realtor. Because someone like you, Rick, like you probably get 3-4 loan officer phone calls a week.
Yeah.
And so if I'm a new loan officer and I'm calling you up, like, dude, stop. Like you're trying to
I had enough coffee.
Trying to kick your coverage. It doesn't work, man.
Yeah. No, I agree. And I think that, one of the challenges, at least on the real estate agent side, is because they know that we are like frontline, we get sold to all the time. Like whether it's loan officers or it's home warranties or it's escrows or it's, leads.
Pest
like,
inspection, home inspection.
Right?
Nonstop.
Like if the average consumer doesn't like getting spammed, just be a realtor. Because like then you'll be totally grateful.
We have the best realtor CRM. You should check out our realtor CRM. We have the best. And then the recruiting calls from the other brokerages trying to recruit you over to their brokerage. Oh, you're Keller Williams? Oh, you should come to Coldwell Banker. Oh, you're Coldwell Banker? You should come to Keller Williams. Like it's just nonstop with you guys for sure.
And the worst part is because they know that we are lead generation, they know we have to answer the phone. Right? So it's become, and I've noticed that more recently, and I get it. There's a hustle, right? I'm making phone calls. So like the hustle's real. Like I don't fault it.
It's fascinating you say that though. Like, do you find that the person who hustles the most respects the hustle? Right? Like if you're gonna blow up my phone, I'll respect you so long as when you get me, you say something valuable.
Yes.
If you get me on a call and then you say, "Hey, Eric, I want to help you build your business." Great. How you can do that? Well, I want to get to know you better. I'm out.
Yeah.
I'm out.
That I agree with. Like you don't want to waste my time.
Yeah.
But especially because like if we're constantly on the road, like I'm going to be on the road later today. You call me. If I'm already on the road, I'm on the road. Sure, I'll hear you out. I'm not going anywhere. Or I got laundry to do or something. And it's always, and to be fair, sometimes I do like to listen to some of the spiels because it allows me to also know what's going on out there. Right? Like you mentioned, if a brokerage calls me, I want to know what the other brokerages are doing.
Yeah. What are you guys doing that's new and unique? Yeah.
Right? I want to know what's trending because to your point, you're chief revenue officer, which we'll go into here in a second, but it's like, you need to know what people are doing. Right? To say, hey, do I need to adapt that or not adapt that? Mm-hmm. What's the problems with some of these things? Where are things heading? So I totally get it. So yes, to answer your question, I do answer the calls most of the time. I don't want someone listening to this and be like, well, now we have free range to call Rick. I'll give him your phone number. I'll be like, oh yeah, Eric wants to talk to you. But
I'm
yeah, I
pretty
don't,
quick to shut down solicitations.
right?
Pretty
I would
quick.
imagine. So, but yeah, so you are also chief revenue officer for, is it Next Gen Lending? What have you been,
Nexa, Nexa.
oh, thank you. There you go. Next Lending. So what have you been working on from a chief revenue perspective? Is it more of how are we doing cost savings versus how to get more loans? Is it a balance of both? Like, how does that role play out?
So creating unique value propositions for our loan officers is a
Yeah.
big piece of it. Like, how do we be in front of trends, not a follower? How do we
Right.
innovate? And I would say our CEO is probably the best blue ocean strategy thinker that I've come across. Everything
Interesting.
is break it. Let's find out what happens. Like, I hate status quo. Just because, like you say, well, we've always done it that way. Oh, don't say that.
Yes.
That's not. I don't care that we've always does it. That doesn't make it right. Makes it
Mhm.
comfortable. Doesn't make it right. And so, like we're rolling out a new commercial lending platform built on AI for all of our loan officers. And so if you're a consumer and you want to buy an investment property, you want to buy, but you're also self-employed or you're thinking about becoming self-employed or you want to get a business loan, we'll have an AI automated portal that will also do business lending. So SBA loans, equipment financing, factoring, business lines of credit, things like that. It'll all be AI driven. And so helping our loan officers help more people, right? Because we hate saying no, right? Like, oh, you want a business loan? Sorry, I don't do that. It's like if you're at a company and you ask somebody something, oh, that's not my department. Don't. I, I hate that. Right? Oh, that's not my department. Or I sent an email. What else do you want me to do? Like don't. And so we don't want our loan officers stuck in that either, right? Look, if you've got somebody in front of you who wants to borrow money, how do we say yes? We don't want them
Mhm.
going somewhere else. Find a
Right.
way to say yes. And so using technology, using partnerships to roll out value propositions like that. We just acquired fizbo.com, right? So our loan officers reach out to for sale by owners, give them free marketing, free websites, free, so that we're their partner, so that when the house doesn't sell, well, I have a realtor partner that could probably meet with you and talk to you, right? It's lead gen for our realtors. Because
Right.
as you know, for sale by owners, they don't sell. Like they don't,
Right.
like they just don't.
Yes.
And so, but let them figure that out for themselves,
Right.
right? You don't want to be the one calling and saying, no, it won't work. Now they don't like you, right?
Yeah.
And so, no, it'll work. We're going to be your cheerleader. We'll give you a free website and free marketing and free photographs and free. Yeah, no problem. And then you wait a couple of weeks. Oh, this is just not working. Well, should, I got a realtor that can come and just meet with you and maybe give you some tips.
Yeah.
Right? It's just lead gen. And so how do you create value for your loan officers because to us, the loan officer is the front line. They're the ones helping realtors and clients and consumers. And so
Yeah.
how do we help them be more valuable in the marketplace? And that's really the goal.
Yeah, I've noticed that across most businesses. It's like the sale people, when they're not in the sales department, they get so mad about how well the salespeople are being treated in their companies, where it's like the trips and it's the bonuses. It's like, yeah, but they're the ones making money, right?
They're
Like
the
they're the
ones
ones
they're the
bringing in the
ones
money.
making the company money.
Right, exactly.
Yeah,
Right.
that's great. And
So it's
themselves.
like,
And themselves.
yeah,
And I say
absolutely.
to every underwriter and every processor, hey, if you want to go knock on doors, then be a loan officer.
Yeah.
You want to work on straight commission? Then be a loan officer. Oh, you want a salary? Well, then this is what you get when you get a salary.
Yeah.
But you could choose.
So I'd be curious with AI and being able to be more supportive, do you see a shift in less back end people and then a bigger effort in recruiting more loan officers?
It's
Right?
both.
Because,
I wouldn't
yeah,
say one's more,
okay.
right? You have to find a balance of, right? Because if you recruit more loan officers, but you don't have a platform that best supports them,
Hmm.
they're just going to leave,
Right.
right? So you have to balance transparency of, look, this is what we're good at. Here's what we're not good at. If you find that valuable, we'd love to talk to
Hmm.
you.
Yeah.
And then making sure that we have systems on the back end that are scalable, right? You got 35, like we have 3,500 loan officers, right? And
Hmm.
so with no middle management. And so we roll out probably 18 trainings a day, And
Wow.
so they're all recorded and they go into the library. And so loan officers go into the library and watch whatever recordings they want. We have live coaches, right? If you got a live client, live deal, you're stuck, get on a Zoom with a live coach. They'll walk you through it. And so you have to have systems that are scalable based on whatever it is that you're trying to do with your business.
Yeah. Where are you seeing some of the bottlenecking when it comes to scaling?
Processing. Yeah, it's processing. Everything else combined and then processing.
Just trying to get everything through.
Yeah, I mean, you're still like, you think about a purchase transaction, right? It's still like, using California as an example, it's the listing agent that's choosing title and escrow. So every purchase, it's a different title and escrow company. So how do you automate that? Right? You need insurance quotes on the new house, right? So the home buyer has to go get homeowners insurance quotes, which we don't have, which are not automated, because we can't say to the home buyer, hey, you have to use this insurance company. No, can't do that, right? And so there's a tremendous amount of variables that are still the processor's responsibility to get, check, upload, babysit. Like we had a file today, the escrow officer. So there's a title rep and then an escrow rep. And the escrow officer was trying to get the title invoice and couldn't get the title invoice. And so our processor couldn't get the docs out without the title invoice. And so all these emails are going back and forth and back and forth and back and forth. It's like, you guys, it's a freaking invoice. Like everybody stop. Everybody take a breath and make an invoice. Right? Yeah, it's an invoice.
It's really simple.
And yeah, but I literally had to insert myself.
Yeah.
And so you have you still have so many people that, well, I sent an email. What do you want me to do?
Oh yeah. I learned early on in my career, just in real estate, was because one of my first jobs was an assistant project manager. And so I had to learn to close the loop, is what one of my mentors told me. He's like, I'm like, yeah, I reached out. I was waiting to hear back. And he's like, no, you need to close the loop. If they haven't responded, you call them. If you haven't done that, you got to do this. Like, you have,
call them, you're basically taking ownership. Call their assistant, leave a voicemail. Call the boss, leave a voicemail.
Oh yeah. And as a realtor, when I have to schedule a showing for a buyer, I tell my buyers, like, hey, look, just so you know, I've left a voicemail, email, and I send a text message. Just so that way, if we don't end up getting a showing, I'm like, no, you don't understand. I've reached out multiple ways, multiple times.
So I'm a little more pit bull. Like, I'm going to call the broker owner
to get that showing.
Like, there's a listing at 1234 Main Street. I've called, texted, and emailed the agent. I've called, texted, and emailed their assistant. No one's responding. You have a fiduciary responsibility as the broker owner.
I've done that.
Your realtor is not serving their seller. This is a liability problem for you as the broker owner. Get that realtor to call me back. And then hey, I'm so sorry. Yeah, I don't need sorry. I need a showing.
Yeah, I will say I have done that before. I remember back in the day, it was like 2012 when like the market was super nuts. Like short sales were becoming like normal sales. I remember there was some short sales where we never heard back from anyone. So me and my client actually knocked on the door and handed an offer.
Yeah.
And the seller was like, we never saw this offer.
That's real.
Yeah.
Yeah. Good for you. That's great. Yes. Yeah, short sales back then, it was like 6-9 months to get a short sale to go through. It was just brutal.
Yeah, it was brutal. Now, kind of talking about from the client perspective, have you been noticing here in 2026 anything different in terms of how buyers are acting versus the past? Are they more, let's say, timid to get pre-approval? Like, most of my clients are fine with getting pre-approved. Once you explain that, look, it's free to do and it's good for us to know.
I think having your credit pulled is still a barrier, right? And so we do soft credit pulls, right? We're not.
Yeah,
I think all our pre-approvals are with soft credit pulls. We don't want to put an inquiry or affect their credit score. Just do a pre-qual or even a pre-approval. So that, I think, consumers like. That's certainly a big thing. Depending on the consumer, right? Baby boomers really struggle with technology, and so when you're saying just put in your name, just click this button. Put in your name, your email, my what comes after name? It's the second field. You just need to look at your computer screen. Put in your phone number. Then you put in your email. You don't need to listen to me. Just click the button, follow the
Right.
instructions. Well, how do I create an account? Click the blue button that says create account. Oh, okay. Right. And so you still have that. I mean, that
Hmm.
still exists, right? And, it's not going to go
Yeah.
away anytime soon.
No.
And so that's the biggest problem with technology is just consumer adoption, right? Like
Sure.
getting the
That makes
consumer to
sense.
change their behavior is not the easiest or fastest thing in the world to have happen. They still, a lot of times I'll have a client saying, look, I need to bring you my tax returns. I'm going to bring them to you in paper. I'm like, nope,
No.
nope, 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 nope. No. Well, so now I got to scan them all in page by page. Then I got to sort them into folders. Then I got to upload. No, oh, hold on. Yes, but I'm going to charge you. That is a brutal amount of time
Yeah.
that I'm
With
going to
high, I would
charge you for.
imagine high risk. Like, what if one page wasn't scanned or something wasn't factored in, right? Like, if you missed a Schedule
We'll
E
get
for all your
tax
rental
transcripts.
properties.
We'll get tax transcripts, or we'll get updated statements, or we'll get whatever. But yeah, like I don't know. No, I'm going to send you a link. You're going to upload. If you can upload a photograph to Facebook, then you can upload
Right?
a bank statement to our portal.
If you want everyone to see your grandkid, you can load up your tax return.
It's the same buttons: browse, document, upload. It's
Right?
the same process. There's no difference.
Yeah.
And so sometimes you'll have a consumer that will struggle with that. Sometimes, right?
Yeah.
Especially the baby boomers, right? You get somebody 70 years old or older, they're going to be struggling with technology, and they just are. And so sometimes you have to, like loan officers or myself, like you'll do a Zoom like this, do a screen share. Hey, client, share me your screen. No, move the mouse here. Yeah, there we go. Click on that. There we go. Right. Sometimes we have to do that for the client.
Yeah.
That's fine.
Yeah. No, I mean, that's fair. And to be fair, like when we get to be 70s or 80s,
Yeah, I'm
like
not
to
going
me,
to know how to drive a hover car.
right?
Yeah.
We may be in the same boat. Like, it's so funny because like there's certain like technology stuff I'm usually pretty good, but there's some stuff I'm like, I have no freaking clue.
Oh,
And
there's sometimes I've got an assistant who's 22. I don't know, give it to the 22-year-old. They'll
yeah.
have it done in 20 minutes. It would have taken me 8 hours.
But my first sales jobs was Brookstone and Radio Shack. I mean, technology was my thing. And now it's like, dude, it's so
If you
far.
say Radio Shack and technology was my thing, brother, you are dating yourself.
I am.
They're
I
20
am.
years ago, but that's not today,
They've
brother.
lasted as long as they did. I think they ended up closing all but like one
I
or
loved
two.
it.
And I think those are franchises.
I loved walking into a Radio Shack just to look at all the gadgets.
Yeah.
Yeah.
Yeah. I will say I was 16, my first sales job that was like legit was Brookstone, which is kind of like a sharper image, all that.
Yeah, I love Brookstone.
I mean,
They're
it
still
was
around.
also
I think Brookstone's still around.
not the stores, but you can still get the products.
Oh, interesting. They closed all the stores.
I think I
I
haven't
thought there were
seen
still
one.
some I haven't seen one in California in a while, but I thought they're still in like other states.
Maybe
Yeah.
airports.
Maybe airports. Yeah.
I could see airports because yeah, back in the day, this was early 2000s.
They had great
So,
gadgets.
oh yeah, I called
Yeah.
myself the little shit specialist because I could sell all the little stuff, like
All
the
the-
massage chairs and stuff. Yeah, I could sell them, but like these little clocks that were like add-ons, I could get people to buy 5 or 6
The
at a time.
$20 widgets.
Yeah,
Yeah,
yeah.
yeah.
Because all I had to say was they're in a perfect little box, so they make great for like quick birthday gifts, quick this, quick, and that just got people to think, oh shit, yeah, you're right. And so they would buy like 5 of them just to put in a top shelf in their closet.
That's
And then I'd be like,
hilarious.
hey, if you buy the batteries, I will personally set up each clock for you. So then they all started buying up all the batteries.
Good for you. But that's it. So you learned at a young age sales skills, right? That
Mhm.
most people are not learning in today's
Right.
workplace, right? They come out of college with a 4-year degree with no sales skill. And so, okay, how's that valuable? Like you have a
Yeah.
Bachelor of Arts degree? What's that going to get you?
A nice picture.
Yeah.
So,
Piece of paper, certificate.
right? And it's all, but I think it's not only that, but like, you take the real estate, because what's interesting about loan officers is like you guys tend to be much more analytical, which works well.
That's why we
Right.
become loan officers.
Exactly.
Yeah. for sure.
Right. But on the real estate agent, because it's such a low barrier to entry, everybody gets into it. And then it's like, but you don't have those personal skills, which is
That's
fine.
great.
I think it can be learned, or you find your niche, right? Like,
Yep.
look, you're an introvert, but you love your dog and you go to the dog park and you just chat it up with people, right? Like, you don't need to do hundreds of millions of dollars in sales. You need to do a certain amount. But yeah, there aren't really sales courses unless you pay for them on your own. Or in my case, I was blessed to actually have managers that would teach you all this stuff.
Yeah, mentorship is huge. If you're going to be in sales, right, you have to latch on to mentors.
Yeah.
People that are doing what you want to do. You're not doing it yet, they are, and latch onto them and learn how. Right?
Yeah.
I don't know of any other way of getting to where we want to go.
I agree. On the buying side, a lot of my clients are house hackers. So they'll buy properties, rent by the room, but they'll live there.
Nice.
But that's how I got started. So I did 2 house hacks in LA. And so that's why people, to your point, they would latch on. So I looked at myself and said, look, just so you know, I'm not just a real estate agent. I'm actually here to help you build your portfolio.
Love it.
Right. And so now it's like, okay, 2, 3, 4 properties later. And then even when they start investing out of state, it's like, yeah, I've invested out of state. Let's talk about it. Because then I can always refer them to another agent, or we end up selling their properties here to do the 1031 exchange. So I think that, especially going forward, I'd love to get your take on it. I really think the relationship aspect is going to be much more important going forward.
I agree. So I feel the word relationship is thrown around as a buzzword, though.
Okay.
So anytime I hear a buzzword, right, I just go, let's properly define that. Like a paradigm shift. Oh, we need a paradigm shift. That's a buzz. Like you're throwing out buzzwords, right?
But we have good synergy.
Yeah. You're right. And so relationship, how do you manage the value of the relationship without technology?
Are you asking me personally or just in general?
Yeah.
So actually what I often do is equity reviews when it comes to the real estate side. So we actually meet
do an equity review.
What's that?
So let's use that as an example. To do an equity review, how do you remember it's the 1-year anniversary?
The 1 year. Oh, you put all that stuff in your CRM. I mean, that is a technology aspect. That is a technology aspect. Okay.
CRM, which means you're managing the value of the relationship inside your CRM so that you tag them. So I remember to call them in a year or 2 years or whatever your schedule is, right?
Right.
But did you know 90% of realtors don't use a CRM?
Yeah.
They use Excel spreadsheets.
I believe it.
So I come back to, how do you manage the value of a relationship without using technology? Because that realtor using an Excel spreadsheet doesn't remember to make the phone call at 12 months. They don't remember.
But they keep the relationship.
They aren't keeping a relationship because they're not staying in touch.
Right. I guess that's a really good way to put it. To be fair, I always try to just make phone calls, call past clients, things like that. I've actually started working on one of my big goals, especially now that we've moved, is to actually do more in-person, like client appreciation events. It's actually one of my goals.
So how do you market your client appreciation events?
Well, that's where technology comes in, right? You got to either send an email.
But 90% of realtors don't use a CRM. So even if they did an in-person event. So I'll give you an example. So one of the things we rolled out, knowing that realtors don't use a CRM, knowing that realtors don't know how to market to their databases, if they even have a database, we do it for them for free. Look, I'm going to pull all of the clients that you did a buy-side transaction for in the last 8 years out of the MLS. I'm going to pull them. I'm going to do a reverse lookup on their phone numbers, emails, etc. And I'm going to market from you, the realtor, to those clients on your behalf for free.
Interesting.
Because you're not going to. You're just not. You're not going to do it.
Right. It's fair.
And so we're going to do it for you. It's all automated, right? You just have to click a button and just authorize us. We'll just do it.
Yeah.
And so people, it's about the relationship. That's a soundbite. That's just a soundbite. How are you managing the relationship? It's like if you're married, right? And you don't take your spouse out on a date once a week. Oh, but it's about the no, man. No, you're taking the relationship for granted. There's work to be done.
Oh, for sure.
Okay, that's any relationship though.
Right.
And so if you're going to manage a business relationship with a consumer, how do you manage that and be valuable to that consumer without technology? The answer is you can't.
Right.
And you won't. Okay. So therefore, when I hear realtors or loan officers or salespeople say, no, it's about the relationship, it's a trigger mechanism for me. It's like, no, it's about systems that are valuable, that allow your relationship to be nurtured based on the systems. But if you're just out there being charming, then say it's about charming. It's about being charming. Don't talk to me about it's about the relationship.
Yeah. And then you do and there are agents out there who are very charming.
And they do well.
But then to your point, they don't get the referrals. Like I know real estate agents. So like I have friends that are in the business. So we talk, like, hey, how did you get this? Like at one point I had 4 listings at the same time, right? Which as like kind of like a single producer, that keeps me busy. And so people are like, well, how did you get it? So then I explain. And then I'm like, hey, how did you get this in this business? Oh, I got it from this lead generation. But oftentimes, rarely do I hear that they actually got a referral.
Yeah.
And it's wild. Because then if we do the same volume of business, it means I made more money than you because I didn't have to pay for all those referrals.
Pay for all the leads, yeah.
Yeah, right?
One of my favorite stories, I was trying to explain to a room, I had about 50 loan officers in a room, and I was explaining that every time you meet with someone you know, even though, like it could be a friend, it could be a business, whatever, before you leave that meeting, coffee, dinner, whatever, you have to remind them what you do for a living, that you'd appreciate a referral. And all of them rolled their eyes at me. Every single one. They all just rolled their eyes. Eric, we're not an Amway. I was like, you're not recruiting them. You're simply letting them know that you'd appreciate. Do you know anybody who's renting right now? Do you know whatever? And so one of the girls said, that doesn't apply to everybody, Eric. I said, okay, who doesn't it apply to? My dad. Okay, so your dad refers you clients? No. What does your dad do? He's a CPA. Your dad is a CPA and he doesn't refer you clients? Okay. Have you ever asked? Just one time have you asked?
Yeah.
Well, no, but if he has a client, he knows what I do. He'll send me clients. That is not how it works.
Yeah.
Do me a favor. The next family dinner, just humor me and say, Dad, I'm just curious, right? You know what I do for a living and you haven't referred anybody. It's like, is there a reason you haven't referred me a client? So she did. So she came back like 3 weeks later. We're at the next meeting. She goes, I can't believe it. I said, what happened? She said, my dad said, I didn't know you needed referrals. Of course, I'd love to refer you clients. Come to my office this week and I'll give you my Rolodex. Because she asked.
Well, and it's interesting because like some people think, oh, they're because like it's always a fine line because you don't want to say you need the clients. So most agents are like, oh yeah, I've been really busy with blah, blah, blah. Like okay, are they too busy for me to refer? Clients. Yeah.
Who in sales doesn't want new clients?
I agree. But but when you describe what, oh, how's work been? Oh, work's been super busy. I got this going on, that going on. Then sometimes if you word it incorrectly.
Yeah, to me, that's wording it incorrectly.
Oh, 100%.
I never say I'm busy.
It's funny.
If somebody says, hey, how's work? It's amazing. But I always have room for more if you know of anybody.
That's exactly what I say.
Yeah, but I always have room for more if you know of anybody.
Yeah. I either say that or I say like, hey,
needs me.
Yeah, I'll say that. I'll say like, yeah, actually, it's been amazing because we're even working on different systems to be able to help more people. Like I'll word things to be like, hey, yeah, we're doing.
Don't tell people you're busy. Oh, I'm so busy. Ugh. Oh, you're too busy for clients. Got it. I won't refer you to anybody. That's all you told them.
Yeah, exactly. And I will say I have heard, and I actually haven't tried it because one of the concerns some salespeople have is like they don't always want to come off as being salesy. Like they don't want every dinner to be like, okay, now it's like, okay, I get it. Eric's gonna wants me to sell him a loan. But I have heard some people actually make these calls like, hey, I know we're best friends. This is my once a quarter call just to say, hey, look, if you know anyone. Right. So it's like they know, okay, this particular call is about sales. And every
I
other
would also,
call after that, it's about walking
yeah,
dogs.
I would also say though that if you give first, right? So if I'm going to have dinner with my friend and my friend is a sales manager at a car dealership, hey man, like what could I do to refer you clients? Like your
Mm-hmm.
sales manager car dealership, I would imagine that you'd love to outsell all of your salespeople, right? Make them look bad. Who can I put? What could I do that would be valuable for you? And then
Mm-hmm.
listen and take notes and try and do those things.
Yeah.
And then after you take notes, by the way, do you happen to know somebody who's renting? Like any of your salespeople at your dealership, do they rent? Let's get them in a house. I'll give them 100% financing to buy a house. They don't need.
Yeah.
Like if you go rent an apartment, I need first month's rent, last month's rent, and a damage deposit. If I buy a house, I need nothing.
Yeah.
Which one's cheaper?
You know what's funny is like with FHA, right? It's like 3.5% down, higher.
We do down payment
debt.
assistance. We'll do 96.5 plus down payment assistance, and then you're going to negotiate a seller concession for the closing costs.
100%.
They came into the deal with zero cash.
Yeah. And it cracks me up because it's, and I've told people, like, you have to understand, it's actually easier to buy in LA than it is to rent.
And
like,
then you house hack, and then you teach them how to house hack.
You.
Go buy a 3-bedroom, 2.5 bath house, and then rent out the other 2 bedrooms.
Yeah.
To pay your rent, to pay your mortgage payment. Like, what do you mean it's cheaper to rent? No, it's not. No, it's not.
No. My favorite when I've had clients like on the fence about house hacking, and they're like, yeah, but I don't want to live next to tenants. I'm like, you live in a fucking apartment. You already live next to tenants.
That is hilarious. Yes.
I'm like, the only difference is you get to choose them, and the money goes to you.
Yeah, I swear, man.
Crack up.
That's
so
hilarious.
As we
you live in an apartment. That's funny.
Yeah. So where do you see things happening in the mortgage industry, real estate over the next, let's call it like 5-ish years? As interest rates are kind of what they are, some people are having their come to Jesus moment, that sort of deal. What do you kind of foresee happening?
Look, we all still need a place to live. You got to have a roof
Right.
over your head, right? It's a necessity. So it's not going anywhere. I think both mortgage and real estate are going to have the same weeding out process that a lot of other industries are going through, where the weak aren't going to make it. If you're going to make it as a realtor, closing one deal a year isn't going to fly anymore. If you're a loan officer, closing one deal every other month, it's not going to fly anymore, right? No one's going to do business with you because you're not adopting technology at a pace where you're valuable. You're just not. You don't know what you're doing. And so, we'll go from 300,000 loan officers to 75,000 loan officers now to 60,000, 50,000, 40,000, 30,000.
Yeah.
Right. And with realtors, you're going to see similar numbers. People are going to have to find other things to do. But I look at AI the same way I look at when they invented cars, right? So they invented cars. I wouldn't want to be in the horse and buggy business.
Right.
Right. But everything moves over to cars, right? So how many jobs did cars make? And so how many jobs is AI making? Not how many jobs is AI, disposing of.
Yeah.
It's just people need to be open to change. Just like the electric light bulb, I wouldn't want to be in the candle business, when they invent the electric light bulb.
Yeah. It's funny. Like I see those like motorized like carts delivering food, and like people are like vandalizing, like, oh, you're taking away delivery drivers. And I actually was the one that commented, like, I don't see anyone vandalizing vending machines because they take the jobs away from store clerks.
Yeah. Yeah. Or the self-checkout kiosks at grocery stores.
Right. Like
or
it's
or the self-serve gas pumps.
Right. But what I'm hoping is people will realize, okay, I can't, I guess, quote unquote, aspire to do some of these lower level jobs. I need to make a change.
Well, that's a society shift. That's a society shift.
Which is a whole other conversation.
You have to instill ambition.
Right.
Right. And your parents either gave that to you or they didn't. I don't know how to teach. I don't know how to teach desire or ambition or hunger. I don't know how to teach. I can teach. You can teach someone real estate. You can teach someone sales. You can teach someone mortgages. You can teach all that's teachable, but I can't teach to if you're not hungry.
Right.
Nothing I can do. Your parents gave that to you or they didn't.
Yeah. Fair enough. Fair enough. Well, if someone is more interested in the mortgage industry, if someone needs more because they are hungry, Eric, how can they get a hold of you?
Eric-Mitchell.com, ERIC hyphen, like a dash, Mitchell, MITCHELL.com. All my information is right there as soon as you log in.
Great. And then I know you have your book, The Why of Money. How can people get a hold of the book?
It's right on my website. Yeah, I got a book published in 2019. And
Congrats.
yeah, it was a big passion project, helping people understand, why do you want money? Like, people, oh, I want security and I want safety. And it's like, oh, those are the wrong reasons, because that's what's stopping you. You want money that has no purpose. It's because it has no purpose. You're not doing all the things you should be doing, because there's no purpose behind it. And so how do you create purpose behind making money? Now you'll do it. Now you'll do the activities. And so book breaks down what those are and how to do it.
Very cool. All right. Well, thank you so much for coming on the show.
Thanks for having me.
And then anyone listening or watching, thank you so much. And I'll talk to you guys next week. Want to keep unlocking the secrets to building real wealth in Los Angeles? Stick around for the next episode. Tap the video on screen to keep watching.